The Apartment Gurus podcast is brought to you by Greenlight Equity Group, an apartment acquisitions and holdings firm co-founded by Carl York and Tate Siemer, host of this show. We offer you the opportunity to be an owner of cash-flowing, wealth-growing apartments without the headaches of being a landlord. These assets are recession-resistant, risk-mitigated, offer significant tax advantages, and are a great alternative to the stock market. Ready to check it out? Go to www.investwithgreenlight.com today to book a personal consultation with Carl or Tate. Again, that's investwithgreenlight.com. We look forward to meeting you. Welcome to The Apartment Gurus, where twice a week, host Tate Siemer brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Siemer and the Apartment Gurus.
Welcome everybody back. Another episode of the Apartment Gurus podcast, and I am super excited to bring you the first edition of the Sayulita series. I just made that name up, but I am working remotely in Mexico right now for the month of November. It's actually Halloween day right now as we record this. And it's super fun and exciting for me to be able to do this. So much of what we do is digital these days. But just about the only thing I can't do from here is visit our properties. And so I'll be doing that hard and heavy in December and January once I'm back in the States. But this is the International Apartment Gurus edition. And I'm super excited to have a true heavy hitter on the show that is going to bring us some really amazing perspective on scale, doing this business at really large scale and doing it really well. Whitney Elkins-Hutten is the director of investor education at passiveinvesting.com and partner in $700 million in real estate, including 6,300 residential units. That includes multifamily, mobile home parks, single family, and assisted living, 7 car washes, and more than 1,400 self-storage units across 11 states. And she's got a lot of experience flipping as well. So a lot of you single-family home flippers are going to be able to relate to some of what Whitney has to say here. But I mean, Whitney, talk about like just killing it. Like, I hate to use the word overachiever because it infers that you're achieving more than like maybe you could or should, but you are just crushing it. I guess before we kind of dig in, talk a little bit about that. Like, how do you feel about where you are in your career these days? And I want to talk about kind of how you got to where you are. Just talk to me about how you feel about your portfolio. And I mean, you're so diversified and scaled up, and it's super exciting.
Yeah. Well, first, thanks for having me on.
You bet.
I'm so happy to be here, and, I'll have a fantastic conversation. As far as how do I feel about my portfolio, I feel good about it. And, especially like heading into what could be like choppy waters, like with inflation and a recession. I mean, I am so thankful to be out of the roller coaster of the stock market.
Absolutely.
Out of the crypto business. I could just say I'm largely out of the crypto business. Still have a teeny bit in cryptocurrency. But I mean, like real estate is really the one true asset that is, we can talk about this. I have 7 guiding principles around real estate, but really is where I think most investors should be, either actively or passively or both, in order to head these choppy waters. And this is you guys you're naming numbers that took me years to get here. So this was not an overnight success. I mean, I started off. I might be the director of investor education now at passiveinvesting.com, but I don't have a degree in finance or real estate or anything like that. I started off real estate investing back in 2002. as an accidental landlord, I bought a house with a significant other. A month later, the relationship fell apart and I had a house and I needed a way to figure out how to pay the bills. And so I stuffed it full of roommates. The house needed a major rehab on it and hadn't been updated since the 60s. I mean, we're talking some psychedelic flowers painted all over the walls and green shag.
Wow.
I mean, it was pretty bad. And my roommates literally didn't mind living in a construction zone. Not only that, I was able to help my friends help pay in like pizza and beer and sushi to do a lot of the work on the house. And 11 months later, I sold it for a profit. And I mean, it wasn't until that time that it struck me, oh my goodness, I actually doubled my income in 1 year. I haven't been paying for any of my housing expenses. How many more of these projects can I possibly do? And I got to keep all that tax-free because of the 121 exclusion. And so I rolled that into another project. Not all of my projects have gone swimmingly well, like that one. I mean, I've taken my lumps. But, eventually my husband joined me in our, living and flipping a house hacking antics. And we scaled a portfolio of over 30 single-family properties, still doing a lot of flipping on the side. And then we had a child and we needed to figure out how to scale our time because we had just worked ourselves into another job, a leverage job, right? One with great tax benefits and great business opportunity, but we needed a way to scale further, faster, actively. And then in this crazy world of passive investing in other people's projects. And so those numbers that you read off, we're really proud of that portfolio because it includes both our active and our passive investments. And we've been able to unlock those golden handcuffs and not only achieve what we set out to do for ourselves much earlier than we thought we were going to do it, which is be financially able to retire, but create an impact in the world because we're really, building, participating in projects where we're revitalizing communities and providing clean and affordable housing.
Yeah.
Which I don't know. I come from public health. It just tugs at my heartstrings. So.
Sure. Yeah. I mean, when you've got how many units? 6,300 residential units right now. That's 6,300 families or couples or individuals whose well-being is really in your hands. Like, the whether or not they have mold in their walls or have asbestos in the building or have things like fire alarms and proper safety smoke detectors, safety cameras on the exteriors, proper lighting. Those things all make a massive difference in the safety and in the quality of life of residents, and you are making a huge impact. And landlords that and investors, whatever you want to call us, who miss that point, unfortunately, in my opinion, are kind of missing a moral obligation because this is not just flipping paper like the stock market. This is you have human lives at stake, and you have well-being, health, safety, all that stuff in your hands as a landlord. If you don't fix that railing that's rusting through on the second level of your balcony, bad things could happen. And guess what? If bad things happen to other people, that should be enough. But it also obviously opens up you to vulnerability because you're not taking good care of your property, and that's just the physical side of things. The cultural side of things, the aesthetics of the building, the community events that you have, and all that stuff. Well, let me ask you a little bit about your portfolio. Where are you invested mostly, and in what asset classes?
Well, yeah, a large bulk of our portfolio is in multifamily housing in Texas, South Carolina, North Carolina, and Florida.
Why those states? There's nothing going on in those states these days. Like,
absolutely nothing.
I'm kidding. The Sun Belt's super hot.
Super high. Yeah. It's population's growing, income's growing, jobs are growing, jobs are diversified. Housing, affordability is pretty good there. You've got, then you've got the business side of things with, tax advantages, good tax rates for business owners. And then you also have like landlord tenant laws that allow you to create an individualized response on how you work with your tenant. You're not just one size fits all type of, landlord tenant relationship. We still have some single families, properties. We're a little bit more scattered on our single family properties. We've been transitioning a lot of those from, Kansas City and Indianapolis area into more lifestyle investments for ourselves. But I've been really proud on how we've been diversifying out of that. This is past year and a half, 18 months have been a great time to sell single family property with high asset prices. However, we've really strived to try to keep our tenants in the properties and sell to our tenants.
Nice.
Get them into properties. Yeah, we have one closing this week where, we're selling to the tenant and been working with them on, first time home buyer, low down payment assistance programs and getting people into homes, in an environment where it can be really challenging, especially whenever there's big money coming in here and willing to throw down, all cash on properties. We've been trying to keep our tenants in there.
Yeah, that's great. Good for you guys. Are you doing like creative financing, lease options, stuff like that? Or are you just able to get people?
We've been really trying to work right now through the end of the year in a lot of municipalities, there's still great down payment assistance programs, post-COVID, and, FHA terms that really make it pretty attractive. We wanted to, I understand, seller financing and, lease option type of deals, but we really wanted to make it a clean transaction for our tenants. So yeah, we've been working that angle. I'm sure with other properties, as the interest rate environment shifts into next year and those programs, down payment assistance programs tend to dry up, we'll probably be looking at different options.
Yeah. Nice. Good for you. Well, let's go back. I usually do this towards the beginning of the episode, but I still want to highlight, I always like to look at the genesis of the real estate portion of your path, right? So in your case, you had a significant other that you owned. Was it a duplex, did you say?
No, it was a single family house. And you guys broke up and you inherited the house and from there, it was like game on. You figured out how to be profitable with that thing and how it could enhance your financial life and in the rest of your life. And so, a lot of people, when you ask them, well, what was the genesis? What was the spark that got you into real estate? I swear, Whitney, 40% of the time it's Rich Dad, Poor Dad. Yeah, I got that book all wrong. I'll tell you.
Yeah. So it's so funny when I ask people that and they say that oh, there was this book by this guy named Robert Kiyosaki. I'm like, yeah, I know. Yeah. I know the book.
The Purple Bible, right?
The Purple Book. Yeah. The Purple Bible. Yeah. But I think it's just, I just want to, I don't know, maybe get your thoughts on this, but it's just so cool to me the way life works sometimes. In your case, that, the end of that relationship, the closing of that door or whatever, maybe it wasn't that big of a deal, but it was the end of something. It was the end of a chapter that led to the next thing that, the next step in your opening your real estate career up. And look at what's happened since then. I think that's an awesome story myself.
Well, thank you. Yeah, it was, I think it's story of resilience in a way, because I mean, at the time when I had actually bought the house, I was the one that could qualify for financing and everything was under my name. So I didn't really inherit anything. I just inherited all the bills because I thought I was going to have a 50-50 partner in paying all the bills. And, it was something out of necessity I needed to figure out. I had actually borrowed money from my grandfather in order to pay for the down payment. And I didn't even realize at the time just what a gift that was. He cashed out a CD that he was getting paid 14% on.
Oh my goodness.
Give me the down payment on the property. And then I paid him back. I paid him back with interest, but he couldn't go reinvest and get that same CD at 14%. Talk about love or
no doubt.
Just really wanted to see me succeed. But yeah, it was, it's whenever you look at the numbers, like the size of our portfolio today, what we've been able to do both personally and professionally, it's the tip of an iceberg. There's all this work that's gone into it and all these iterations and obstacles that we've had to, bump up to and overcome. And that's, really, when I talk to a lot of investors and they're like, I want to do what you did, but I want to do it in 3 or 5 years. I'm kind of like, I can help shorten that timeline a little bit, but it does, part of that equation is the time that we've been in real estate.
Right. Yes.
So you do have to let the clock work for you a little bit.
Oh, totally. I mean, that's one of the reasons why Warren Buffett is where he is right now, is because he's been doing it for 6-7 decades. Like, just, it's the compounding interest thing over time. And in your case, the growth of equity, the growth of markets. You've been through 2 growth cycles, right? I think if I'm thinking through it right, you've been through 1 correction, now going into 2. I guess, well, let me ask you about that. So what was 08, 09 like for you?
I was oblivious to 08, 09. We were doing flipping and house hacking locally here in Colorado. And the housing market in our area that we lived in, Boulder, Colorado, didn't correct very much. It just flatlined a little bit, for like a year or 2. Not even that much. I think it was like flatlined for like 9 months, maybe 1% downward trend. But wow, we just kept, it's location. I mean, even if you went 20 miles south, like into Denver, that was a very different story. And we were safely oblivious to that. Now, remember, we were living in the properties and taking advantage of that 121 exclusion. Right. So even if we got nabbed, and the housing prices did falter on us for a little bit, it just meant we need to live in the property a little bit longer and wait for it to recover. We didn't have assets. We weren't floating external assets. We didn't start doing that until 2014, 15, 16.
Okay. So you didn't have you didn't have a whole lot of exposure, really. I mean, you were kind of insulated by virtue of the market you were in and the types of investments you were in. Sounds like.
My husband was more exposed to the stock market at that point in time than anything.
Right.
Yeah, we were really very blessedly naive.
Well, it's interesting because almost every investor that I've had on the show that lived through that last correction got really hurt by it. Like, one guy went to jail over, making a very, not very malicious thing that he did, but still illegal. But he had $100 million company that basically collapsed. And so it's interesting that, it seems obvious, to say, and not to state the obvious, but the amount that something like a recession or a downturn or a correction affects you is directly determined by the types of investments you're in and what markets you're in. Like you said, location. So that, I mean, that in and of itself to me is a very powerful takeaway here. You know, and why I think so many of us, and I think you, Whitney, and myself love multifamily as much as we do, is there's some inherent insulation from recession built into that asset class just by virtue of the fact that they generate revenue and profit based on rents.
You've got natural market appreciation, happening that can also cut against you too. But you also have forced appreciation on the asset. So, as you continue to maintain and improve the property, add additional streams of income, optimize your expenses, even if the market does take a dip or go a little bit sideways, you can still make money on the asset, right? Because it's valued based on its net operating income. You've got the tax benefit.
Right. Hopefully
you've got this is one of the principles that I hope everybody is taking away right now. You can have all four of those, foundational principles checked off, but if you've got construction debt leverage, short-term leverage on the property, you've got a leverage exposure right now. But if you're locked in or you've got rate caps in place and extensions already paid for and in place, you can weather, this choppy water environment, a lot better.
Yeah.
All right. And then, there's also the natural inflation hedge risk of multifamily assets because you can renegotiate your lease year over year. I mean, it's also why I love self-storage, and because you can do it over 30 days, and car washes in hotels because you can do it almost daily if you wanted to. But those are, again, whenever you invest in real estate, if you can hit all those check boxes and you buy correctly and you can hit all those check boxes, you can, bob and weave, and I should check that you have good operational and CapEx reserves. You can weather, this environment very well, right? This is not the time to be looking for home runs, but rather those, single and doubles, if you will. Base hit.
Yeah, to the listeners and to my editors, the last 3-4 minutes there, it was gold. Everything Whitney just went through is like formulaic how to maximize opportunity in multifamily during a recession or during a correction or downturn. So listen to that again. If you didn't really catch all of it, make sure you listen again, because there was some really key valuable stuff in there, from fixed rate debt to rents being hedged against inflation. I just did a little video that I sent to our investor base, our email list, specifically about why multifamily investing is a hedge against inflation. It protects the value of your money because the investment that you're investing in is gaining an operational income in an inflationary environment. And so as your NOI goes up, the value of your property goes up. Now, one thing that might happen is the cap rate environment might decompress a little bit, which does directly affect the value of your property. But as far as your returns, your cash on cash, your metrics during the hold of the investment, everything's good. Like you're making ends meet, you're paying your debt service, you're paying debt down, and paying your investors if you got LP investors in there. And so, again, every time I do one of these shows, Whitney, I'm just like re-sold on what an amazing opportunity we have, what an amazing space we're in, and how we can really include and help other people and serve other people by being in this space, and how it's really like yours and my moral imperative to get out there and spread the word on this stuff.
Absolutely. Yeah. It's, I wish I were as influential amongst my friends and family as I am amongst other investors on the other platforms. But there's really a level of curiosity there, and they're like, "What? How are you doing the stock market? How far down did your portfolio go?" And I'm like, I've been sleeping well. I've been out of the stock market since 2017, 18. I broke up with the IRS years ago. I'm like, I'm good. Now I shouldn't say like, I'm not trying to be like overconfident or, uppity about it, but yeah, it's an entirely different game where you realize that you're taking on not only control within your portfolio or who you're personally investing with, if you're a limited partner investor, but you're playing a different investing game, right? One that's of ownership, one that's based on true value that can be created and affect, like a business that can be impacted and affected, as opposed to just, short of a casino, really.
Yeah, no, it's just a brilliant space, and it's one of the reasons why I love the show. Is I don't spend a second on the show thinking maybe I should be talking about something else. It's like because one thing is I'm blessed with such amazing guests on a show to show basis that are up to such cool things. That's and that's just kind of a sidebar. Like the quality of human being that's in this space doing what we're doing is exceptional, in my opinion. Now, of course, there's exceptions to that, but like the level of personal development that so many of us as entrepreneurs in the space participate in and take on and transform ourselves through is remarkable to me. And I have never seen anything like it. In 49 years of being alive and working in different industries, like I've never seen anything like the level of contribution, the level of generosity, the level of care, like authentic care for other people's success. I think it's amazing. Do you notice that too?
I do. And, that was something when I transitioned over into, real estate. Well, one, it was not an overnight transition. It took me years to kind of fully step into the role and the person I am today. Part of that was I was bumping up against my identity, right? I'd spent all this time and money to go to school, to get my various degrees. My husband laughs at me. I think I have more initials after my last name than I do letters in my name. And guys, I have a hyphenated name, so it's pretty long.
That's amazing.
But even then, like, I hadn't really understood that, investing in real estate was a relationship game. And when I took control and understood that I could be in charge of my own investments, I'm actually smart enough and good enough to do this. And really, I think most people can check that box, but it's stepping into that fear of that unknown and actually taking on that responsibility. Yeah. And then, like you said, continuing to develop yourself and, understand what do you want? Why do you want it? And who do you need to become to get it? And then filling in those mindset skills and networks that you need to have to go get what you want. And that you can't do that in a vacuum, that you need other people to do that. That's the amazing part of real estate. I know I've kind of like circumvented the actual question here, but one of the things I like kind of pointing out, my daughter, she's in school at home. We're not homeschooling her per se, but one of the reasons why we did that is because we saw the failure of school, like through the pandemic. She was at home and I'm like, man, she can't do anything. She gets one shot to take a test and she can't like work in collaboration with other people on a project. I'm like, that's not how the real world works. Right. We wanted her to learn differently and learn those skills earlier on. And so, we made a conscious choice to, put her in a different type of education. And long story short, I wish I had realized that earlier, had pushed back on that system earlier in my life. Maybe my portfolio would be double what it is now.
Jeez, that's scary.
Maybe I would have been able to create a different impact in the world, a larger impact in the world. But
well, speaking of that, what's the future hold? What's the future hold for you guys? What you have? Do you have a vision for where you go from here? I'm sure you do, because you don't get to where you are without a vision. So my guess is that you guys probably have some goals and ideas of where you're headed.
Yeah. So, professionally, like with passiveinvesting.com, we're scaling a 300 unit car wash business in the next 5 years. And so we're looking to, IPO that and take our investors along with the IPO. So, that is something that we're super excited about. We're building the first third party management company that will allow us to be able to do that. We're continuing to, this year, we doubled our multifamily acquisitions, not like acquisition count, but the capital raised and acquired on those deals. And I think we'll continue to scale that. And we're also scaling our self-storage portfolio. And so there's a lot of great things on that front. We're scaling our real estate debt portfolio. We're looking to double that in the next year. Whether we actually achieve it or not, you shoot for the moon and you land on the stars. Right. Personally, one of the questions that I love is, when my husband and I look at our particular investments, we've achieved what we thought was going to be years off today, but we're not done, and one of the questions we've really spent past year on contemplating is how do we want to feel when we achieve our goals? Because I think that really is what helps you understand if you're fulfilled or not, right? I never dreamed of in a million years that we'd have over 6,300, residential units and the impact that comes from that. But how do I want to feel? Like that's going to tell me whether we're done, right? Like, or enough's enough. And so we're continuing to, flesh out what that looks like. It's such an interesting ride. Like, and we were chatting before the show. One of the things that we love doing, you love, taking a month on the road and going surfing. Like we tend to follow the mountain biking trends. So, we go spend time in Arkansas. We go spend time in Sedona. We live in Colorado. So, that's, it doesn't sound like a tangible goal, but that is a lifestyle goal of ours, is to be able to have that location independence and remote work. And it plays into the 5 freedoms that I think real estate can give you, which is financial freedom. Everybody talks about that, but the other freedoms are like location independence, freedom of time, freedom of choice, and freedom of how you want to create an impact in the world. And, it's learning, again, that personal development, continuing to expand on and learn those different facets about yourself is amazing.
Yeah. Yeah. That's so powerful. And I, the word that kept coming to mind forgive my language, listeners, but the word that keeps coming to mind when I think of what you guys are doing is badass. Like it's so cool. Like you guys have set yourself up so that you can chase a passion in mountain biking, which, as most of my listeners know, is huge for me too. I'm a big mountain biker. I'm not a big surfer. I have very little time in the ocean, but I'm working on it. But so for you guys to be able to do that and to make an impact at the level that you're making is so cool. And here you are on podcasts out spreading the word that you're spreading, sharing the opportunities that this space presents for people and giving back in that way too. So, the thought leadership thing is fantastic. You're really hitting on all cylinders, Whitney. Do you agree with that? Or do you feel like, am I missing something? Is there a part of the business or life that, could use a little injection of steam, or are you really chugging like I think you are?
Professionally, I think, definitely chugging on all cylinders. Passiveinvesting.com, we have an amazing team of over, 40 internal employees that are, working, tirelessly to, source, acquire, underwrite, and, run the day-to-day operations on all these deals. And so, we just wrapped up our directors meeting here a couple weeks ago, and it was just so cool to see what individual departments are doing, and but collectively where we're looking to scale as a company. Danny Randazzo. It's so funny. Like, most people look to have a 10-year vision, and he's sitting there going, here's my 100 and here's my 500-year vision. I'm like, it's just so impressive for me to, play on that level, with this group. And it's such an honor. So.
Yeah. Was that Danny's? Did Danny found that company?
There's 3 founders: Dan Hanford, Danny Randazzo, and Brandon Abbott. So the 3 of them together, founded PassiveInvesting.com.
And so let me ask.
They're amazing individual, amazing business people.
Yeah, sounds like it. I know Dan Hanford a little bit, and but I'd love to have any or all of them on the show. I think that'd be fantastic. Let me on a completely different level of conversation here. Greenlight Equity Group, we're deal finders, deal makers, and capital raisers, but we often are able to land deals that the capital raising for is a little above our heads. Like the amount of equity that's needed is more than what our machine is capable of right now. Do you guys offer opportunities to work with syndicators like us? And if so, like, what does that look like? And, how would somebody go about applying or looking into that?
Yeah. So, here at PassiveInvesting.com, we're focused on direct ownership of all of our assets. However, I think I encourage people, right? We talked about investing as a relationship business, right? It takes multiple people to take down these type of deals. And so and I'm sure you're not the only one that has this question here on the podcast. This is where it really becomes the power of the group and the power of the mastermind. Who are those people and I'm going to answer this like for everybody on the pod. Who are those people in your network that could be co-GPs, co-general partners on a deal, or maybe that have a fund of funds that can bring in money on a particular deal, or who are high net worth investors that, maybe they're a doctor and they have like 10 doctor friends, right? That could, maybe just kind of network other high network investors on a deal. And then you have like your investing groups. How can you tap into those different investing groups now, right? Like identify who those people are now and develop the relationship now. That way, whenever you do have a capital need, that they're pretty easy to approach with those type of deals. Because when you need money, right, as we both know, you got a deal under contract. Like you have a finite time in order to raise the money to get that deal closed. And so that's not the time to be sourcing new leads for the business. I had a great mentor of mine that was always focused on, anytime I had a question on like, how should I like develop my own business, personally, professionally, and he was like, always focus on the list, get the list built, to get it twice as big as you need it. Because when you finally land on that deal, that's going to, crush open the doors for you, because that's when you need to have, the leads in place that you can go, potential clients in place that you can work with.
Right. Oh man, that is gold. That's really well said. And that's a great focus to have. You're speaking to me directly, but I know there's listeners that are getting a lot out of that too. Like, build your investor list, guys. And guess what? There's a lot of great effective ways of doing that these days. Not the least of which, in my opinion, is LinkedIn. I think if you do some quality relationship building on LinkedIn, and you're not going for that email address right away, but you're just building rapport, that's a great way of doing it. Online virtual networking events, national conferences, live meetups, et cetera, et cetera. There's masterminds that you can join. There's so many ways to build that investor list, but focus on that list. And then I would just add focus on the quality of marketing that you're getting to them. Make it a real value add format, that you're bringing them as much value as you possibly can. And that's great stuff, Whitney. Good job.
Yeah. Well, my pleasure. Yeah, exactly. I would echo, all the comments that you just had there, because, again, it's when you need the money, that's when you don't need to be looking for the investor that has it.
Yeah.
So, the list.
Yeah. And that's the exact opposite of the deal first approach, guys. Like, where you hear people talk about find the deal and the money will come or whatever. Like, no.
We're moving to a different environment.
Yeah.
Like, for the last 10 years, that might have been true, right? But we're heading into a much, different environment where, private capital, like bank capital, is going to be tighter to get, but also so is private capital, because that investor is, a little nervous on, they're chasing yield for one, but two, they still want yield. They still want diversification. And that's something that's going to be a little bit challenging for them in the next few years, but they're still a little bit nervous. They need to understand that, you are the person to invest with. So, kind of like killing two birds with one stone, right? Like you said, provide value. That's also going to help them to know, love, and trust you before they actually write the check, because with scientific, I guess like there was some marketing research here by Harvard Business School about 5-10 years ago that said that before somebody buys, they've interacted with your business on average 7 times.
Right. Isn't that amazing? Totally. Yeah, absolutely. You hear that over and over again. That's the case. And like, I think one of the things that we all need to remind ourselves of, especially in these kind of tumultuous economic times, we are the hot woman in the red dress that walks into the party, and because we are the ones that everybody should be, really like hot after, seeking after, because we've got something that nobody else has. We've got cash flow, we've got appreciation, we've got tax advantages, we've got hedge against inflation, risk mitigation, like, on and on. Whitney, you did a great job of summarizing all the benefits earlier. And that, we need to keep in mind that that's an opportunity. We're not out there asking for money. We're out there presenting opportunities, plain and simple. So that's what you need to keep in mind, folks. And the more that you can adopt that mindset, the more powerful you'll be in your capital raising efforts. So, Whitney, this has been amazing. Thank you so much. I'll put you on the spot here. One last question. Any words of wisdom, kind of final words of wisdom that you've learned from your career, your amazing career of so far? And, it seems like in a lot of ways you guys have a lot ahead of you too. So, what kind of wisdom have you picked up along the way that you might want to share with the audience?
I think one of the things that I'm realizing is that there's another level to play at. There's always another level to play at. And so again, going back to that centering question is like, how do you want to feel like whenever you achieve your goals? And and that goalpost can always change. That's what's so amazing. And so I'm, as far as words of wisdom, just get started, right? Because, don't have that comparison mentality. Everybody has to start somewhere, and just get into the real estate game, right? We saw people double and triple their portfolios in 2.5-3 years, consistently for the past 5 to 10 years. It's going to be a little bit longer game now, but you have to get in. You have to start letting time work on your side.
Boom. Great stuff. Really good stuff, Whitney. Thank you a ton. For listeners and anyone else, what is the best way to reach out to you, learn more about what you guys do? Is it send them to passiveinvesting.com?
Yeah, you can find us there. I have some free goodies for the audience if they want to go to passiveinvestingwithwhitney.com. It's a subpage on that website, but you can't get those goodies anywhere else. You also get access to my calendar, and we can talk shop. And I would love to, help people out. Multifamily, like I said, we have to do self-storage, hotels, car washes, and stuff like that too.
Yeah, there you go, folks. So passive investing with Whitney.com. Best way to reach Whitney and get some freebies. And, I love when guests share their Calendly link on the show, because it shows that they're willing to personally invest in each one of you, which is remarkable. And as you all know, I do the same. I offer free consults with anybody that wants to jump on my calendar at investwithgreenlight.com. So with that, Whitney, I just want to again say thank you. Have tons of gratitude for everything that you shared today. I think you dropped some huge value for us. So wish you all the best. And as always, stay in touch and let us know how we can help out.
My pleasure. And thank you so much for having me on the show.
You bet. Listeners, thank you guys. We love you as always. Drop a rating and review if you'd like this show. If you didn't like this show, you can, I guess, drop a rating and review, but I think you're crazy because this was an amazing show. So with that, we'll see you in a few days. We're getting these out twice a week, really trying to get as much value out there as we can for you. And so we'll see you on the next episode, guys. Take care.
This has been The Apartment Gurus with Tate Siemer. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of The Apartment Gurus.